Alright people, what's going on? Welcome back to the trade breakdown. So today I'm going to recap a trade that we took live on stream on Tuesday and give you guys an insight into why I don't use limit orders and why I prefer to use buy stops and why you guys need to become more reactive traders than traders who are trying to predict the markets. So we jump on the charts here. Like I say, this was all taken live on stream. You guys can go back to the stream of the 12th of March where you can see me execute this position live and share my screen doing so as well. But basically, coming onto the live stream today, we were saying to everyone on stream, gold is liquidating previous daily lows and hovering around this very nice support. Now, the nice thing about this is you guys can see, if I get rid of this, we have right here a beautiful double bottom. Now, if you take a look at this on the lower time frame, I won't do it because it will skip it forward. Every retail trader is probably trying to do this right now. And the way that the markets move and the way that gold moves is, even if you're going to see this push back up, gold is never just going to reject a support once and just push, or reject a resistance once and just push down. It's always going to come up or come down, re-grab the highs or lows, and then have the push. And that's why trying to be the first one in the markets is never a good idea, because you're always going to re-grab the lows before having the push. So at this point here, you don't jump in longs. This is where retail see this level of support, put their stop loss just below. You can either short into that low or wait for it to be grabbed and see if we can still hold above that support. So there you go. People just got stopped out on gold. And what did you just do? You've grabbed daily lows, you've grabbed this little double bottom, and you're still holding this very nice previous level of support around 174.5-ish. So a good amount of confluences to see this push up. And as I was also saying, even if gold is going to have a push down today, you're going to need to grab liquidity above all these highs before then doing so. So we were then marking on previous 30 highs here, and that's going to become our targets. So we then drop down to the 15. And you guys can see here, last 15 of the 30 closed back bullish back above this level. And you can see you got this 1, 2, 3 triple bottom. People jump in longs here. They all get stopped out, and then price is going to push exactly as they expected. So as this 15-minute close bullish, what I was saying to everyone, cool, if this next 15 opens and gives you an instant bottom wick, we are going to look for a buy stop on the break of the high. And the reason I prefer to use a buy stop is because I'm getting in with the momentum once and if price can flip bullish. If price just opens and just, creates the top wick and then just pushes down, I'll put my buy order above the wick, which we did. And if it just keeps pushing down, then I'll just delete the order. I don't care. But if price can reflip bullish, I'm going to be in with a buy stop and be also in with the momentum. So I'm eliminating the element of trying to predict, and I'm reacting and following where momentum is going. And that is the reason that I don't like using limit orders, and I only use buy stops and sell stops. If you use limit orders, you're putting your order at a place where you're expecting something to happen. Whereas for me, I don't really care if the market is going to go up or down. I'm simply going to react and be in with the momentum. So if we take a look at the 5-minute here on gold, you can also see we closed with this beautiful morning star here after grabbing this very nice triple bottom, which is an amazing reversal formation, and gold absolutely loves these morning and evening stars. So the next 5 minute of the 15 opened. So right now, I can't show you guys because it will skip it forward, but right now, previous 15 is bullish. This is currently the bottom wick of the 15. And as I was saying to everyone on stream, we are now going to take buys if this 15 can reflip back bullish, and we're going to be risking off wherever this low is going to be. Because if the 15 flips bullish and then comes back down to create a new low within the last 10 minutes, it's probably just going to keep pushing down. So we don't need to have stop loss all the way down here. We can just have it below that low. And if, let's just say, the next 5 minute did open and just kept pushing down, then amazing, that's fine. I delete my buy order, no loss. But as this was then rejecting on the 15, we had a buy stop on the break of the high. Next 5 minute opened, instantly pushed up. 15 is now having that beautiful flip, and we've just got tagged into an instant 12 ticks, risking about 8 with 0 drawdown because we're in with the momentum. And what I was saying to the guys on stream is this is the area where we have to be looking to take some partials and put our stops to break even. Because as you guys can see, as I mentioned before, This is the previous 30-minute high that we could grab before pushing back down. But if you take a look here, we have 1, 2, 3, 4 equal highs. Anyone who is short on gold from here, where's their stop loss going to be? Just above this high. So as soon as you start grabbing that high, that's where you then have to be taking some partials. And I said to the guys, as you break this high and as you fail to close above, close around 80% of your position and put stops to break even, because we do have these targets here. However, it is CPI day, so don't be greedy. Price then came up, tapped into that level of resistance. We hit around 17 ticks in about 10 minutes. 17 ticks in 10 minutes, 0 drawdown. You guys trade like 5 contracts, nothing huge. That's around $850 in 10 minutes joining a free YouTube live stream. And that's why I said close 80%, put your stops to break even, because we're grabbing previous 30-minute highs. And from here, who knows? Could you just keep pushing down? Maybe. So you don't want to have your risk open on the table. You want to lock in your gains right there. And it was as simple as that. But if you guys do want to watch me take these trades, we go live on YouTube for absolutely free every single day, 7 till 9 a.m. London time. See you there. Peace.